The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 79, Nasdaq up 30, S&P's up 9.5, gold contract down $14.70, trading at $14.91 an ounce. We got silver down 44 cents, $17.20 an ounce. Light sweet crude down 78 cents, $55.12 a barrel. Notes and bonds. You get the 10-year down 5 ticks, 130.07, 30-year off 12 at 161.31, and King Dollar up 202 ticks, 99.311. I believe King Dollar tested its highs, and that's when the euro went under 109, and now the euro is 109.07. The pound's out there at 123, and the yen is trading at 108 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. I want to know what's going on in your world. In the world of the markets today, we'll see once again if this S&P can keep and get any traction. This is like basically about the third day in a row. If we get over and we take a look at this, what you're going to see, they open the market higher, bottom line, and it just starts rolling. And when I say rolling downtown, you know, on Friday it had every shot in the world. It got all the way up to 29.93 and then closed out at 29.63. This morning, bottom line sideways move out here. Gold contract. Let's take a look at it, man.
Get some action.
They slamming it.
Some downside action.
But guess what? They're slamming it right into, and it's going to be a big day and a big week in gold. There's no doubt, folks, because what you have is this. You're back to the breakout area. Now, that breakout area had 600,000 contracts. So you're talking about monster contract volume. I don't see, 652,000 contracts. So the breakout area is 1484. We hit 1486. And so far we rejected it.
Yeah.
Now, this is what it would take for a real bullish rejection. Right now, when I say rejected lower price of the breakout area. Now, what you'd want to see is that you want to see it get back inside the range, the higher range that it broke down also, which is a swing point, which is 1492.10. And we're 1491.80. Yeah. Now, silver did the same thing. Now, silver has come back. It's 1710. Now, it's a different date. Silver's got a different setup. And we hit 1715 this morning. So this is going to be really intriguing watching this because 1710, where did I get the 1710 from? Oh, there it is right there.
Okay.
So 1710 is the low of the 23rd of August. All right. And we hit 1715. Now, if we get a rejection there, it's going to be pretty cool because silver's so volatile. But what we'd also want to see is that I would take the higher range, actually. I'd want to see silver. I don't think it's going to happen today, but I want to see silver get back inside 1758.
Okay, kind of the low of September 18th.
Yeah, and I'm not taking this one because that's you know what I mean? It's like there's more of them up here. Bonds, notes and bonds. We got to take a look at the note and bond market. We get payrolls this week. So,
that'd be fun Friday. Yeah. 8:30, right?
Yeah. Note and bond market, they're trading sideways.
Yeah, and I think we had the private payrolls Wednesday. ADP.
Okay. Good.
A little indication maybe of things to come on Friday.
Right. Now, the Chinese markets, they open one day, they're closed for a week now, okay?
For the final 4 days of the week, right?
Yes.
Yeah. So what is it, 700th? 70th?
Oh, it's 70th.
70th.
I know. Imagine it's only 70.
Yeah.
I know. That's pretty wild when you think about it.
Yeah.
70th.
They got a lot going on over there.
And King Dollar.
I know.
Let's go to King Dollar because King Dollar is what's rocking the metals market. There's no doubt about that.
Oh, yes.
So King Dollar, the high that it got to today was the September 3rd high, 99.370.
Yep,
we made 99.451.
Yes.
459. All right, we'll see how, and you're going to see when that was happening, it was the euro breaking down.
Yep.
And the euro got down to 10885.
Yeah.
And it's not like it's too far off of that level right now.
No.
So.
And I wonder, can we go back on this? How far is this? Even 5 years real quick? Does that go back? I mean, yeah, so you're going all the way up to at least 2017.
Right, and you can put that on a weekly to make it clean, too, which is, you know, because this is where, you know, when you see this, folks, okay, it's in a very dangerous spot. Now, me being bullish on gold, what happens is that simultaneously, this euro, you know, technically, this type of break could be a very decisive break, and really, the euro could get blown apart here, man. You know what I
that's
mean?
crazy. I mean, look at we just blew past kind of a 618 too.
Exactly.
And that was hanging out there.
That's right.
You could argue that was hanging at 618 from March until
now it's down to
August, and then it's just really harsh,
And so this is the, you know, for being a metal bull, the scary part would be that, guess what? Your next stop here, you know, would be 108.02.
Okay, that's the high of that area.
Yeah,
sure.
and then the bottom is 1. You know,
103.4.
103. You know, I mean, you know, so
we just hit 109. That'd be a big move. 103.
Huge. Yeah. No, I know. But literally, that's how it's set up.
Totally. Where else would it go? Right.
So it's one of those.
And with everything going on, you know, Brexit, what's going to happen there? Right. The euro, the dollar,
and
China slow down.
And what a few of these currency analysts start talking about, and this is a new twist on it, man, is that Germany's slowing down.
Okay.
And, you know, they're the biggest economy in the European Union.
Okay.
So it's like, okay, if Germany's slowing down, it's the first time you heard that for a while, you know, it's like, oh, okay, hold it. The euro, if Germany really is slowing down, how much can that affect the euro? And I don't know.
Yeah, we may find out.
Yeah, so 877-927-6648. Let's go take a look at the NQs. So we also had on Friday, folks, is that when we were actually on the air, the NQs started. And, of course, it wasn't a big acceleration when we were on the air, okay? It was basically kind of after we get off.
Okay.
But the NQs are the danger for the market in general. You know, if we take a look at this, you're going to see...
yeah, it was 11:30 was the news came out that the administration was considering no more investments in China.
Oh, and that's what
11:30 a.m.
Right.
Is that huge second big bar.
Look at that thing.
Yeah.
That's when we went from 77.90 to 77.08. And
it didn't stop.
No. And what has happened now is that this is like kind of a classic bounce. You know, you've only got to ice. We're right in that bar. So the next couple hours, we'll see if that can hold.
Yes.
And inside the NQs, let's see the strength versus the weakness out here.
And we're going to keep getting some earnings, right? I think, do we get Pepsi, Bed Bath & Beyond, maybe, Constellation Brands?
Okay,
some good stuff with...
So the lead is out here. NetEase is up 4%. Alta's up 2.4. Netflix is up 1.7. That's a dead cat bounce for sure.
Netflix. I've given my fundamental take. It's a tough one to own Netflix versus Disney.
It is. On the way up, the way down, you get NetApp down 2.3%. You have Western Digital off 1.6, Mylan off 1. Nothing heavy, man.
Yeah.
Really.
Yeah.
I mean, there's nothing that is a monster out here. The market in general, now what we're also doing is we're coming into window dressing.
This is the final day of the quarter.
This is it. This is it. So the question is it going to be window dressing or window breaking?
October tomorrow. Yeah. Halloween around the corner.
Imagine that.
Yeah.
Pretty wild, man. Dow's up 98. Nasdaq's at 36. S&P's up 12. Gold's down 16. Silver's up 45. Come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up by 98, Nasdaq's up 40, S&P's up 12.5. And we've been talking about that repo market, and bottom line is that you're going to see a little squeeze here the next couple of days because we're at the end of the month.
And it looks like we might have already seen one, right? The rate on, and so you have quarter end, September 30th, again, last day of the 3-month quarter. Quarter end repo pressures push U.S. money market rates higher. The short-term interest rates climbed Monday as quarter end fund dynamics added to pressure on borrowing costs amid an already tense environment for money markets. The rate on overnight general collateral repurchase agreements, a key U.S. funding market, rose to 2.7%, 2.5% bid offer, I'm sure, on the final day of September. The $63.5 billion that the Fed provided in its repo operation early Monday appears to have helped the rate subside back to 2.3%. The numbers you just almost can't comprehend when they talk about these repo markets, man. The cash injection, it's just that's all right. You can jump around. I was just saying it was below the $100 billion offered.
I want to see if I can just find this other article. This article here. There's another one this morning about J.P. Morgan, and this is pretty cool to understand.
There you go.
Yeah, here it is.
Top one. Yeah.
Right.
Yes, I believe so.
So where do you see this, folks? This is pretty cool. Okay, so the turmoil that's gripped repo markets this month, leaving hedge funds and small broker-dealers scrambling for cash, has turned to a stream of low-risk profits for some of the biggest banks, okay? When the low-profile system for short-term secured lending sputtered for lack of funding, sending borrowing costs to the highest in a decade, banks flush with cash were slow to step forward, reined in by new rules and lacking traders with expertise. But behind the scenes, lenders such as J.P. Morgan Chase have begun offering more money, lured by a much higher returns than they get parking it at the central bank. So
Jamie Dimon on the prowl.
Oh, let me tell you, man.
It's good to be a liquid, well-capitalized bank when people need money, right?
Exactly. The results, banks have offered enough to burnish their earnings, yet it's too little to let the market function as quietly and smoothly as it has for much of the past decade.
It's remarkable.
The dysfunction has kept the Federal Reserve pumping in money to ease the pain of hedge funds. Now, watch this. I got to bring this down here because I just want to show you something.
So they're making money off higher interest rates because there's a lack of capital.
That's
so they're
correct.
providing capital, but not enough to satisfy the liquidity necessary to make sure that the market is still panicking a little bit.
That's right.
It's a remarkable narrative that it expressed that way.
So let's see. Over the last year, J.P. Morgan executives have said they are being more aggressive in deploying spare cash to snap up short-term securities rather than park it at the Fed. The firm spotted an opportunity to make more money in the repo market during last year's fourth quarter after interest rates rose above the Fed, what the Fed offers banks. Oh, here it is right here. Listen, watch this, folks.
Okay, perfect.
The potential to earn more at times of unusual stress is significant. Now, when rates recently peaked at 10%, the gap with Fed funds was 8 percentage points.
Yeah.
A bank providing, listen to this, folks, $40 billion could make $8.8 billion in a day. That would exceed $60 million in a week.
Remarkable, yeah.
And that's, you got to remember something. That's taking treasuries overnight as your collateral.
Okay, yeah.
You know?
So they're saying we're going to get quarterly earnings come mid-October, and not a huge number when you speak of $60 million in a week compared to what J.P. Morgan probably pulls down.
That's right.
Over a period of 12 weeks, which is a quarter. But yeah, pretty low risk, high return money as that market gets squeezed.
Now listen to this. This is pretty cool, man. We're all going to get to learn something here because this quote by Jamie Dimon. So before the financial disaster, right?
Yes.
The banks, folks, it seems. Well, here, let me read the quote first so you can get how this works.
Okay.
In addition to the new rules, there are long-held and new stigmas attached to short-term funding markets. The banks generally eschew the Fed's discount window, where they can easily borrow at 0.5% over the target rate because it carries the stigma of having funding problems. So what that's saying is that if we're all banks, they're not going to the discount window because people are saying, hey, what's wrong with you?
That's the lender of last resort.
Right.
Why are you using the lender of last resort?
Right.
Understandable.
So now listen to this. This is where this really gets wild. This is a quote by Jamie Dimon. No bank will ever go negative at the Fed anymore, J.P. Morgan Chief Executive Jamie Dimon told reporters last week. In the old days, you would go negative during the course of the day by huge sums. So these things just change by the nature of the money markets. Is that wild?
And you just had to be end of day, I believe, right? So they'd go huge negative during the day.
That's
end of day comes. They tell the Fed how much money they need to satisfy their balance sheet to have the reserves on hand. And that's, you got to remember when they were doing that, though, the end of the day didn't always work out so well.
No.
When things changed dramatically over the course of 24 hours.
It didn't work at all.
You shouldn't be allowed to be, completely insolvent at 3 o'clock and then just tell the Fed you need a huge injection of capital that you'll pay back at their rate. You can see how that maybe could go wrong if you've been in the market.
Pretty amazing, isn't it?
Really.
So we'll switch gears. We're going to go to SoftBank. So watch this, folks. Okay, SoftBank. We're going to go to SoftBank in Tokyo.
Okay. To Tokyo we go.
Yeah. So watch this. This is pretty intense, man. So this is the parent company, folks. And, now this is different, just so you get this straight. This is different than the Vision Fund, okay?
Okay.
SoftBank is the biggest.
They have more than the Vision Fund,
They
right?
do.
Yes.
They do.
Sure.
So inside of here, just what I want to walk you through here. This is SoftBank themselves.
Okay.
They take in 3.7 trillion, trillion yen, that is, okay?
Yes.
Sprint does 3.5, Brightstar, Yahoo, they still get the Yahoo share.
Big time.
Now, watch this, though. This is what has happened as faith in SoftBank. SoftBank had just bought back $5 billion. So watch this. Look at this. In February, SoftBank founder announced a $5.5 billion buyback. Well, guess what? They bought it back, spent the money, and it hasn't helped because they just kept selling it down.
Remarkable.
Isn't that wild?
Yeah.
And you can see it. Listen, man, get between WeWork and Uber, the bottom line is that,
I think I heard the WeWork debt's at like an 11% yield right now.
It is. It just went from 6 to 11.
Okay. I found myself when I heard that number saying, oof, you want to own WeWork debt and you're only getting 11%?
I agree.
That's what it wasn't, wow, how did it spike so high? You know, I said, I want a more reliable dead E that I will be giving my money to. And they're going to get new people. We'll see who they bring in. You know, I'm sure it'll be a turnaround. There won't be as waste after all that attention that got paid to the waste.
Right.
But man, what are they going to? They still got a huge task ahead of them.
Huge.
Yeah.
Absolutely huge. And you know, when you do look at the debt markets, folks, it's hard to comprehend how much public companies can get money for a very small rate.
I agree.
And then what happens is that when they blow up, and everyone says, well, how do they ever do that? And it's just greed. There's so much money going after it. If that bank has a good selling team, it's like, okay, you know. Because we're not talking about also, you're not talking about just bonds that have collateral behind them.
What is their collateral? WeWork. A bunch of leases on the debt, right?
Yeah, totally.
I know you're saying the same thing.
Exactly.
Right? What is their debt?
Right.
You know, I'm sure they do have assets.
What can you grab?
They don't have assets when you look at their liabilities.
No. Pretty intense, man.
Yeah.
Let's go take a look at some of the higher volume equities out here this morning.
We're going to break right now, I think.
Okay.
We'll be right back, folks.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 67, Nasdaq's up 29, S&P's are up 8.5. Let's go over to Apple and see what we have happening with Apple. They got their new iPhones out, right?
Yeah, they got an upgrade, man. They're going to get some good action on those iPhones, it looks like, and Apple with quite a pop, $3. You know, 218.88 about we closed at. It's almost 1.5%, and yeah.
JP Morgan.
They seem to know what they're doing at JP Morgan. We were just talking about it, man. So maybe open your ears when they get.
Yeah.
So the product cycle stronger than muted expectations. So everyone low expectations, right?
Yeah.
But you got to. It's just what do you do compared to expectations? JP Morgan wrote that the company should see an additional lift next year when it releases a 5G version of the iPhone. Shares up as much as 1.6%. Expects investor sentiment will improve materially. And I believe I saw 246 from some area was the actual price tag they put on this. Maybe it is in the bottom. 243 it is. Oh, no, there we go. The firm is overweight rating in stock is at 265 target for the end of 2020. So that's some serious growth, man. And I can say as an iPhone owner, I have an iPhone 8 Plus right now.
Okay.
So the 10s have come out. These would be the 11s, right? I guess probably the 12s next year. And I find myself wanting to wait as well. Now, I have a fairly new iPhone, right?
Okay.
An 8 Plus. The difference is pretty muted, as in better camera, I'm sure, maybe an accelerator in there. But all in all, to spend $600 to $1,000 probably not necessary. But the phones that come out next year, man, they're going to be completely different. They're going to have 5G.
Right.
So that you got to see a huge. I would imagine.
Yeah.
It can't be the only one, right? If you have an iPhone and you're within the 3 to 2, 3, 4 year cycle, and your phone's fine, I don't need a better camera with 3 lenses to buy a phone right now.
What's so intriguing about Apple is that in order to get you out of Apple or anyone that's in Apple, man, that's a very tough thing to do.
And the same could be said probably for Android, right? Pretty close, at least. No, you don't think so? You're an Android person.
I've been
All right.
Android forever.
I feel like you're locked down.
But I don't.
You don't feel it in the same way. All right.
I know I don't.
Because I do feel it for Apple. It would be tough.
Yeah.
And it would be tough because, in fairness, I enjoy it. I do like it.
Oh,
so
yeah.
it's not even getting used to a new system. I actually had an Android.
You don't hear people without iPhones saying they don't like them.
No, right? And I had an Android smartphone on like my first smartphone.
Right.
So we're going way back, man.
Right.
2007, 6, something like when they really, and it was an Android. So I'm somewhat familiar, and I've used Android tablets, same exact kind of interface software,
Right.
and I do just enjoy the iPhone more. So
Yeah. So, and then there's more people every day in the world.
yes.
So then they have the shot of getting them into their system, and once they're into their system, guess what?
And look at this is interesting, man. Greater China, huge chunk of their revenue, right?
Yeah.
2018 for almost $52 billion, but a 3-year growth of -4%.
Yes.
That shocks me.
Right.
How is that? Because you imagine that China. I mean, I can understand it like this year, maybe last year. That's a 3-year average. That's not the last 12 months on it.
That's right. I believe it's because the Androids over there are so much dramatically less expensive, and they fire up. I mean,
They're
the
great
Samsung,
phones.
yeah.
So, Android tablets over in the U.S. I mean, that's the one thing about Apple, man, that you almost can't debate. They got expensive products, and so Android in general can almost compete in my mind for a fraction of the cost.
Look at Japan, folks. Up 11%, and that's very telling, really, in general, because the Japanese, if we go back in time, the Japanese made Kors, not Kors, the fashion. I mean,
Michael Kors.
Michael Kors, okay.
Japan made Michael Kors. Is that what you just said?
Yes,
Okay.
all of these high-end fashion brands.
Yes.
I mean, they
were manufactured there. Is that what you're saying?
No. The consumer there, right, is very conscious. They like high-end.
Okay, the Japanese consumer delivered to those companies.
They like high-end products.
Cool.
And the bottom line is that you can see that. Like if you take
especially, I thought you were going to say good about technology too, man. That was Nintendo at the forefront, right? I remember for sure.
Right. Yeah.
Can we go before? That's all right.
Yeah.
I wanted to see when their earnings are. We're just jumping around because they don't report iPhone sales anymore. They just had broken down products and services. Doesn't mean what you're going to hear is you're going to hear their version of the best spin of whether it's products, watches. They get to put out their version, and you're going to get their sales, their revenue, all that. So they can't fudge the numbers. They can't play with. But they do have the ability to only highlight and cherry pick. Maybe they might tell you how many iPhones they sell some quarter if they crush it out of the park. Imagine, right?
That would be kind of wild.
It would. I don't think they would, but that's the exaggeration. They could say, you know what, we had the best day we ever had and sold, 100 million phones in one day or something. But
October 31st.
Okay.
Look at this. Now,
Halloween.
Halloween. It's interesting. They only have 100,000 employees.
Okay, yeah.
Look at that.
Yeah.
That's not a lot of employees for the type of numbers that they do.
And pretty remarkable. I guess we just crossed the trillion point mark, being
Again,
up $3 today.
Look at that.
Yeah, not a lot of employees for a $1 trillion company.
I'm just curious what Google has.
Yeah, and then let's jump around.
107.
Pretty close. They're at 845.
Amazon's gonna have a lot more.
You think so? Yeah, I'd say
just
so.
because it's.
Then we should jump around to like the Boeings of the likes, right?
Yeah. Look at Amazon.
Yeah.
653,000.
Yep, and about 854. So they're right on target with Google.
Boeing 153.
Yeah.
Netflix.
Oh, interesting.
Yeah, exactly. Right.
Let's go Disney after that too.
Okay. 7,000.
7,000.
Ooh, they can bring money to the bottom line.
You gotta
That's
imagine,
interesting.
right? I mean,
no, they're just service,
a movie
right?
producer is not maybe their employee,
exactly,
right? They have contracts with content developers, actors, all that.
200.
200, yeah.
And then Walmart's going to be the big one. That should be $1 million, maybe.
2.2, baby.
2.2 million. That's retail. That's big.
That sure is.
Yeah, then Forever.
Speaking of.
I'm sure all you listeners went to Forever 21. Not wrong. But Forever 21 went BK, folks. Let me see. Forever. Let's see.
Keep going. EV. There we go.
There it is. Okay.
They got a number.
Yeah, they got a number. Look at this.
Let's click on it and see where it brings us.
Oh, I see what's going on. This was out of the UK.
No, where are you going?
I see this UK down here.
Oh, okay. Well,
maybe. I'm not sure.
I don't know. Why don't you just click on the U.S. equity?
Bottom line is that they're BK.
Let's see if it delivers anything.
Yeah.
So they're calling it private.
I didn't realize they were
That's
private
why I was
company.
waiting for what. So they're going bankrupt. They're going to reorganize. I think I do have. Let me see if because I have the article. I mean, just a mammoth company. A lot of people, even if you don't shop there, right? But in the malls, a huge presence.
Yeah.
So
those rents,
I think it was,
and those stores are so huge.
They have 178 U.S. stores, and they obtained $350 million in financing as they go through a reshuffling in their Chapter 11 bankruptcy
and
protection.
They're going to close most of the stores in Asia and Europe.
Okay. Yeah. Let's see. So from its existing lenders, they got that money with J.P. Morgan Chase and $75 million in new capital. So J.P. Morgan, they're all over the place this morning, man. Every news story we hit, right? They plan to exit most of its international locations in Asia, Europe, retailer said in release, continue in Mexico, Latin America, and does not expect to exit any major U.S. markets. Yeah, U.S. markets, they love their shopping in the malls. And they, as long as you, it seems like a lot of those subpar malls, they might have been already hit already, and the new ones, the good ones are left. They're going to try and trim that fat.
Right.
Yeah.
Bitcoin. Let's go to Bitcoin. Take a look at Bitcoin, where that baby's 8,400 and change, I believe. Yeah, 8,100.
Continuing to struggle.
And it went down to 77 today.
Yeah.
That's a number.
I guess dollar hitting that as well, right? Everything, as in the volatility of the currencies, the Bitcoin, for sure.
Stay right there, folks. Tommy and I come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 106, Nasdaq's up 30, S&Ps are up 11.5. Now, the gold contract, bottom line is that really hasn't got a real rejection of lower price yet. You know, we're still messing around with this 1490 area.
Yeah.
You're at 1489. The low is 1486. The dollar, if we go back to the dollar, you know, the dollar is under the highs thus far, but just under them. You know, so that's going to be dicey.
Can we just go zooming in?
Yeah.
I just wanted to see, because it made that high, but it's pulled back a little bit. I just wanted, you know, I was just looking at you. Zoom that in. I think the high was almost at like 8 a.m. Yeah, 8:20, 8:25. Yeah. And that high being 99,459. So more than 150 ticks under that.
This is pretty cool, actually. So look at this, folks. This is going to be a big number. So where I'm going here with this, that's the strength, right? That's the the top side, and what traders would be trying to do there on the euro side. Basically, that's when the euro went down.
Yes,
is that they're selling. In this case, that makes it go higher.
Yep. But
that means we have another benchmark here also, and that's 99.286.
We're right there.
Yeah, which is the beginning of it, which is pretty cool. Do you know what I mean? When you're looking at that. Now let's go over to the GDX, because the equities are not getting hammered like they could. It's, you know, when you get gold down like this, you know, it's
we're under 1,500. We're kind of hanging out down there.
There's a tipping point here. Now the GDX hasn't got to a swing low yet, which is positive. You know, we'll see if we get a rejection here. The swing low from the 13th of September is 2660. You have 80 million shares there, and you're not even get close to 80 million shares. And we've hit 2684. And, you know, bottom line is that we'll see whether it can get up a little bit higher. But it's kind of, it's impressive. I don't want to get too excited just yet, but it is impressive.
No, not when we're right up against that 1486 gold kind of
and
zone.
that dollar, you know,
a lot of strength in that dollar right now.
A lot of strength in that dollar.
How about rates, man? Checking into where we are in terms of the 2-year, the 10-year. That pull it up, if you could, thank you. Because we kind of been hanging it in this area for the 10-year as well. 1.7 seems like the new norm right now, right? 1.8682. Looking at the curve in terms of the spreads, that's the 10-year for the yield, 1.68. 2-year right now, 1.62. So not bad.
No, it's not.
Yeah.
And if we do look at this, so watch how this is set up, folks, because we're right, you know, it's like you can make the case that, you know, they look like they want to test the lows once again, but they're going to have to get through in order to do that. So now if you're looking at Tiger TV, this is the chart of the yield on the way down.
Yes.
And you know, we had a nice bounce. The low was 1.42.
Man.
Gets all the way up to 1.9.
Huge.
The 13th.
Yeah.
And then your next crucial numbers are going to be these lows of the 24th and 25th of September, which is 1.67, that is?
1.62.
1.62.
1.626, right in the middle, yeah.
So as we back into that, you know, if you hold there, well, guess what? You can go right back, yield could go right back up. You back under that, then it's like you're going to have a shot in order to get into lower prices, lower yields once again.
I'm just checking that out. So
Yeah.
1.61, interestingly enough, the 618 retracement of that, if we go a little bit lower.
So
Yeah.
there's certainly a lot of movement in these currency markets. There's no doubt about it. Now I'm going to bring the yuan up for a second, because the yuan looks to me like it's going to go to this is the Chinese yuan. It looks like it wants to go to 8, folks, and they had some. And I don't.
That would be a weakening yuan. It would be going from 7 yuan getting you a dollar.
Right.
So now they need 8 yuan if you're over there doing business to buy that same dollar.
You know, we had made it to 7.19, and you know, you can see the low was on the 13th, which is 7.03.
Yes.
And like when you bring this up, the way I got 8 was I just took the breakout of the consolidation it was in when this was consolidating for a long period of time.
And man, if we cut off China's ability to list their companies here, capital over there, that would be an escalation. One of the things that you could see is China choosing to really attempt to devalue their own currency, just throwing out things. But you got to keep it in mind, man, as we're now sitting above 7, and above 7 almost feels like a new normal.
Well, and that you can kind of see it in that chart.
Definitely.
You know,
we had the president tweeting, I think the first time it kind of clipped over 7, but we haven't heard much about it since. And we're at 7, hit 7.2, kind of hanging at 7.14. I agree. You could see it just continue that trend.
And now I have this on a monthly, folks. When you look at it, you know, this is a kind of a nice setup. It's away from the the breakout area.
That would definitely be blowing through that area.
Yeah,
man.
and I believe the way I did it, I think I took 7. Oh, is that 6 down there? That's
623.
623. Yeah, that's where I'm coming up with 8, I believe, folks.
Yeah, or
that's
maybe in the area from.
Was it the whole way? No, that's what it is. I took the whole way.
Yeah.
Yeah. Well, maybe 7.5, because the whole way is kind of hard to take, really. It's the other side of it.
Yeah, even 7. I mean, what's interesting, it's got some strength behind it. That move last month.
Yes.
Huge one to blow through 7.
So what happens there, folks, what you'll see is that the goods, most of the goods in China are still based on U.S., and that's what we've been talking about. That's why the dollar's so strong trade-wise. But what definitely does happen, if you were doing business there, you say, hold it, man, your yuan just went here. It's yuan to U.S. dollar. I want, you're going to charge me less U.S. dollars.
Yeah.
Because, that's how you can basically get one part of that Taft going down.
Right. Right. One of the components they can tweak.
Right.
Go after it.
And if we take a look at the pound, because
is Boris going to last another week? I just, I can't read every headline I see for Brexit, but I heard that they might try, and that's one of the headlines of many, right? They might try and get him out. Seems like you could write that article any day of the week and it'd be a correct article, headline. Yeah.
So that's not that bad a deal. I mean, we went from 122.84 today to 123.34.
Yes.
And if we just take a look at this also, this is if that's the end of the downdraft there, that was a shallow retracement. Well, no, it's 50% retracement.
Yeah.
From the lows that were generated in September to the highs that were generated out there in was it September also?
Yes, September also.
It's got to be, it's got to be, right. So
a lot of action in September, I know. All in 1 month, man. From 1.2 to 1.26, back down from there. Yeah.
Telling you, it's got to be tough being in other countries, doing business in other countries with their currencies.
Man. If you have huge orders on the horizon, I would look at hedging that, because you could see some volatility in either direction.
Right.
Especially in the pound, in the euro.
Yep. And if we go over to the FTSE 100, we take a look at it. You'll see out here today, the FTSE, basically got some traction Friday, kept it today, nothing heavy. It's only up $5. it's going to have a hard time getting through this downdraft. I'm not quite sure what that downdraft was about, but that was quite a downdraft at the beginning of August.
And I think we might have this priced in pounds, though.
Yeah, that is. That's dollars now, though.
Yeah, what do you have priced in?
Euros.
Euros?
Yeah. Yeah, look at that.
So
I
almost
wonder
right
why
back up to that level.
it defaulted to that.
I think we might have been on that, choosing that, or we could have ourselves jumping around saying.
Stay right there, folks. Tommy and I are going to be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 95, Nasdaq's up 28, S&Ps are up 11, gold's down $18, 1487. Let's go look at that baby one more time.
Coming up on that 1486.
Yeah, and it's, oh, that's good. Okay, so here, let me pull this back. Okay, so yeah, I guess, yeah, I'd like to test it anyway. Look at that. That's a high volume low at 1486.
That's what I mean. Today's kind of spike, and I think 1484 is the area you pulled from prior, though. Yeah,
it is. So I want that tested, and that would be real good because now that's a monster bar, folks. That's 15,000 contracts.
7:40 a.m. this morning. Yeah.
And here we go. We're going to come in for the test. Now, this is really cool. This is what you want. Well, I want rejected, but the bottom line, you need the test.
Yeah.
And what the test does, folks, is it gives you more probability that if you come into that with volume, the probability is going to go lower. You come into it with lighter volume and you reject the price, then guess what? There's no more sellers that are down there.
Yeah.
And what does happen when you get a big spike like that, which is really cool,
There we go.
is that many times the spike that there went from 1492 to 1486, what you have there is sell stops for people that are long gold.
Sure.
You know, so what the market's looking for now is that the market's looking for, are there any more down there? Are there any more? And if there's not, guess what? You'll get a rejection, then you'll start seeing it move higher. You know, because it's a lot, it's very easy to move lower. Once the selling is out of the way, though, it's very easy to move higher because it doesn't take much buying to accelerate the way up when the sellers are gone.
Yeah.
You know?
Yeah.
And you can see that, yeah, with the 1486, 20.
It's a critical area, you know. We're going all the way back, basically, to...
Right. August 7th.
Yeah, August 7th.
August 7th. And
Yes.
that's the strength, and that strength did have 645,000 contracts, and we're not going to do near any contract volume like that whatsoever. And, of course, it's only, 11 o'clock in the morning.
That's right.
As we kick into October.
That's the end of the program. I'm not sure you hear it. Thanks, folks. Take care.
Wow.
We're done. Yep. That's it.